unlike the previous example, there won't always be consistently clear structures to reference on a chart. So a combination of indicators like this can be used in order to find suitable conditions for certain Fibonacci techniques. Like all the Fibonacci tools, I've already covered these indicators in their own separate series. First, begin with a 27-period regular moving average. Then add the ALMA indicator and leave it at default settings. In this case, like a normal moving average crossover, greater bullish strength and momentum is confirming the uptrend's progress as the shorter-term ALMA is crossing above the longer-term moving average. Next, attention goes to the Arun indicator, where the main criteria for even more bullish confirmation would be for Arun upper to cross over and stay above 70. After the moving average crossover, Arun upper must also initially cross over 70, but after that, if less strict criteria is used, remaining at least above 50 instead of 70 could be adequate. It would also be preferable for Arun lower to quickly cross and remain under 50, but this may not always be realistically possible, and it's usually not part of any strict criteria compared to the position of Arun upper. Then there's Bollinger Bands %B, which must also be above 70 around the time of the moving average crossover. After that, stricter criteria would require it to stay above 70, while looser criteria would be content with it at least above 50. Generally, this sequence of indicators is better adapted to simply find these stronger portions of a trend where 3 marching soldiers candle patterns can more commonly be found. And while not impossible, it's less likely price can quickly breach back under the 27-period moving average. In some cases, like in this example, an uptrend can initially be slower and weaker before rapidly accelerating, so usually the range between candles won't be exceedingly high compared to ATR standards. Yet this combination of indicators can help identify the build-up to a bigger bullish move. And indeed, this is quite a strong move since it goes well past the ATR standard. When either Bollinger Bands %B or in this case Arun upper goes below 50, it's a stronger indication the initial bullish move is over. Now shifting attention towards a potential bullish breakout and continuation, it is preferable to see price keep closing above 170, the ALMA indicator, and the final Fibonacci retracement level, while at the same time Arun upper and Bollinger Bands %B remain at their medium to upper ranges. This again is another example of a weaker and more gradual breakout where the price ranges of and between candles isn't particularly high compared to the ATR values of the time. The main target for such a break can be the 1.618 level that forms a range with the distance reached by 3 times the ATR. Naturally, the uptrend is resisted here, and upon contact, there can initially be more neutral to bearish movement for the greater possibility of a reversal. While the green candles, volume, and Bollinger Bands %B are presenting bullish indications, they are not significant yet since price is not decisively closing over this range. While Arun upper does reach those higher values, it doesn't remain there for long. And perhaps more important, the Arun indicator keeps indicating sustained indecision, with lots of instances where Arun upper and Arun lower are moving in the same direction, with sharper angles. At the same time, Bollinger Bands %B is moving and staying closer to the middle, around 50. So even though 1.618 is regarded as one of, if not the most important level, it's possible for indecision to persist around it for an extended time. In addition to looking at basic candles and volume, these indicators can help identify and assess this less common situation.